Okay. All right. So we go straight to the strategies. Now, first of all, I want us to know that using the trend wave strategy actually is one of the strategies, but for me, I would say it's kind of the easiest for a beginner. Now, not all of them are actually easy because especially if I'm going to be choosing scanners, I'll tell you go for golden era, trend wave, smart monics, and kill shots. Yes, those four are good. Okay. Now, the thing is, trend wave always give you like signals every now and then. Like as soon as one is hit, the next one comes up immediately for every time frame. Why? Because it's a trading strategy that have to do with something that is common with the market. Now, in as much as I wouldn't like to go to the basic, okay, because I assume everyone here should have gone through the back office. Probably you've seen the video. We talk about this where they talk about the trends, right? We can remember, right? Okay, so let's talk about the trend. Now, trend is very important. In other words, trend is just simply the direction of the market. Okay. Now, looking at the name trend wave is self-explanatory, right? Because if you look at it, trend and the wave, which means the wave of the trend, the wave of the direction. Now, if you look at this is like more or less like a wave as well. If you've been to the beach, you see the water, the way it goes up, the wave push it up and then it splashes and all that. So I think that's where the name was derived from. All right, now let's go back to trend. We have, of course, three types of trends. Okay, we have the uptrend, which talks about for those of you who remember, talk about the high, higher, low, higher high, higher low, higher high, higher low, higher high, and like that. Okay. I know this is too basic for some of us. Like some of you be like, yeah, we know this already, but it's okay. Let me just start with that just for like kind of introductory, right? So this is called the uptrend. Why is it called the uptrend again? Look at it. There was a high, there was another high, higher than the previous high. That's why we call this higher high, HH. Then there was another high, which is a high, but lower than the previous one here. So this becomes a what? Higher low. And then another one comes higher high, and then higher low, higher high, higher low. The moment you see this, you know that it's uptrend, right? Now, we have the other type, which is what? We have a high, low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, and lower low. Now you see, this is kind of opposite, right? So this now, you have a low here, you have a low that is higher than the previous low, so we call it a lower high, and then we have a new low that is lower than the previous low, which is lower low, the lower high, and another lower low, and it goes on like that. Okay? Now, I want you to notice something, okay? In all of this, you will notice something. So we have the other type, which is, we're not going to talk about that because usually it's always advisable not to treat that, which we call the consolidation. That is neither going up nor going low. It's just moving between 2 points. Okay? We call this consolidation. Now, we don't want to treat things like this. So I will remove this from our topic for whatever things we're talking about. Because what we're discussing today has to do with this and this. Uptrend, downtrend, right? Now, I want you to pay attention because this is very good. It's going to form the foundation of how you think. Because as a Forex trader, let me tell you the thing. How you think matters a lot. Forex trading is not about how intelligent you are, how good you are with the strategies, how far you are in terms of the habit you create. The habit will come from the way you reason when you see the market. Now, look at it. If you look at this higher high, higher low, you will realize that for an uptrend, whenever the market is on its way up like this, from here to here, okay, from this point to this point, it's longer. Now, on its way up, okay, you see a very short move that will pull back. We call it pullbacks. It will be like an opposite direction of the real trend. Remember, the real trend now is up. But once in a while, you see this pullback that will make you feel, oh, it's like a downtrend, but it's not. How would you know? The pullback is always shorter The real direction is always longer. Okay? You see, shorter, and this is longer. It comes back a little bit shorter, and then longer, and then like that. The same thing goes for this, vice versa. Longer, a short pullback. Longer for a downtrend, as it's going down, then a short pullback here, and then it goes like that. Now, why am I emphasizing this part is this. Sometimes when you're looking at an uptrend, you see a little short, and you think, oh, I need to take this. Now, the first rule when you are taking trend wave, okay, is you need to know exactly what the trend is. You have to know exactly what the trend is. You don't just go there and take setup. That's the mistake most people actually make, especially people who are desperate to trade. They just open up, wow, there's a setup. They take it. Then you take it again, and then you keep taking. No, you want to make sure that, yes, you'll be taking the trade, but you want your trade to be refined such that you're going to be having win rates that is so high. I mean, a kind of trade that you can close your eyes and sleep. Okay? I want you to make I don't know how you do it, but make sure that you're taking this point very serious. Okay, the moment you are going to trade, the moment you decide to trade this strategy, you have to first of all realize what trend are we on, at least on 2 time frames, a lower one and a higher time frame. I will explain all that later on, but I just want you to understand this, because if you don't know what trend we are on, because the scanner is designed such in a way that if the market is going down, it's going to give you a setup for a downward trend. It will give you another setup, and you think you're going to be selling now, you're going to buy. So maybe when you enter a trade here, after the entry, it goes a little bit close to TP1, and then it goes the other way and hit your stop loss. And you're like, oh, the trade is bad. No, you're trending. You need to know that it's trending upward, not downwards. Okay? All right. Now that we know this, I want you to notice something else again. There's something else I want you to notice. Okay? Guys, I want you to notice something. Now, when the market moves from here to here, now, the moment you see it pull back, you're not sure what's going to happen. You're like, oh, is it going down now? So how will you know, again, whether to buy or not? The only way to know is this. The moment the market moves like this and then pulls back, what you do is, now I'm giving you like a little bit advanced, okay, way of enjoying this. So what you do is you put a line. You can just put a line. Use this info line, okay? If you're using your laptop, just use this info line, okay? You just click this. Put a line at the highest level before going down. Now, you know the market was going up, right? It was on its way up. And here it made a detour to go down. Now, the moment that happens, put a line here. I always like to hold shift so it can be straight on my keyboard. Now, when you do this, this is to show you when the market is ready to go back up, even if you're not sure here. The moment the market comes and break this place, okay, you either set a buy limit here or you take a buy, and then you know that the market is ready to go up again. Okay? Now, if you have questions, make sure you're typing them in the message in the chat area, okay? Because I'll be answering them eventually. All right, let me take that again. So let's say this is a market, it's on its way up, right? You know, you expect it to continue going up, but there's a little pullback and it gets to this point, okay? When it gets to this point, it started making the way up again. Now, how would you know it's still going to go up afterwards? You put a line up just on top, directly on top of the last high, which was this place, before it went down here. The moment the market crosses that line again, it's ready to go up. So you can buy again from this side. Okay? Same thing goes for a downtrend. So you know the market is on the way down. But while it was on its way down, it made a pullback. And you're like, oh, maybe this market is about to go up again. No, what you need to do what? The moment that happens, you need to put what? A line on the last low, which was the last low you made before going up again. Remember, this was the real direction, down. Now, it made a pullback here, put a line on the last low, and then when the market now breaks this part again, you know that it's ready to sell. You can sell here, and then you watch the market goes down again, and you make your money. I'm going to be showing you this in the real chart here, so don't worry yourself. I'm just going to give you like a background, okay? Now, that is that about trend line. I don't have to go deep again because, you know, it's expected for you to have seen this one at the back office, okay? All right, let's go straight to trend wave strategy and the rules of engagement. I'll use that word. The rules of engagement. I mean, for you to take this trade, there are rules you have to follow. But before the rules, let me quickly explain what I just showed you on the trend line. Let me explain it here for you to see. Now, first of all, if you look at this, now remember the market has closed. So it means whatever you're seeing here is not real because the market is closed. Nothing is moving right now. Okay? But let's just base it as on the last action of the market, which was on Friday, right? This was the last thing we saw on Friday, right? So let's see this. If you're going to look at this, I want to ask us in the question, put your answer in the chat box, okay? If you look at this just by mere looking at it, okay, what does it tell you? What does it tell you? Is this an uptrend or a downtrend? Looking at this. Is this an uptrend or a downtrend? If it's uptrend, put A. If it's downtrend, type B in the chat box. Is it an uptrend or a downtrend? Okay. Up. All right, good. Uptrend. Good, 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 good. All right, uptrend A. All right, good. Now that you know it's uptrend, now let's look at the second thing. Remember all the things I explained. So we said it's uptrend, right? Why did you say so? Let's look at it. The reason we said it's uptrend is this. Because we have what? We have here, we have the high, we have the higher high, we have the higher low, we have the higher high, we have the higher low, we have the higher high, we have the higher low, and like that. Okay? Now, that's first thing. So we now know it's uptrend. The next thing I told you of is, if it's an uptrend, you see that the market is longer when it's on its way up and it's shorter when it's making a pullback. Now look at it. Long from here. The price moved, and when it got here, it came down a little while. And then what happened from here? It moved. It came down a little while. This is a short move backward. Then it moves upward here, up until here. Then it came down a little bit short. So everywhere you see short, you see that the moves are short because the only move that will be long is the one that is in line with the trend, which is uptrend. So whenever it's going up, it's longer. Whenever it's coming down, a pullback is shorter. Do you understand? That's the third thing I told you of. Remember, when I was showing you the trend, I said the first thing you need to notice is the higher high, the higher low, the higher high, the higher low. The second thing is when it's moving up, the upward movement is longer than the downward movement. Okay? So you don't take the downward movement because it's going to be short. It will not give you your TPs before it pulls back and start going the right direction. Okay? So avoid, whenever you determine it's an uptrend, always wait for a buy. Now, when you see a buy, now, when you see an uptrend like this, and the scanner says sell, you don't sell. Just ignore the trade and wait for another one, or you go for another pair that have something you're looking for. Hope you understand what I'm saying. Now, the third thing I want you to notice is what I described, like a little strategy that I gave you out there, which I said that if you want to be sure whether to buy or not after a pullback, how will you know? Okay, look at this. If you look at this market here, the last low, it was a low, like it was going down, like a downtrend before. Look at the lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Now, you now see the market going this way. You want to be sure whether to sell or to buy. You're not sure yet. What do? You bring the line. This was the last lower high. Remember, this was the last lower high before going down. So you put the line from here to here. Now, what is the indicator? What does this indicate? You're waiting for the market to break this. As soon as the market breaks this, what happens? What do you do? Let me show you. So as soon as the market breaks this, right? See, the candle broke here. This was the break, right? As soon as it breaks this, when it pulls back here, you put your buy here, your buy as a buy limit. So what I do is, so let's say it breaks this, you put your buy here as a buy limit. You see, as a buy limit. Okay, then you wait for the market to pull back. Like, see, the market came back to the entry and went upward, danced around a little around here, came back here and went higher. So if we're going to look at that again, let's look at this slide. So you see here, this was the last high, okay, before this low. So what do you do again? You do the same thing. Sorry, you do the same thing, just put the same line and put it down on this one. You see? You put it on the last lower high before this low, right? The moment the market breaks it, what happened to the market? You see, the market pulls back again. Let me show you. I want to make it clear so you see. Look at this candle. It broke this line, right? After breaking, it went up. So you set your buy here again. And what happens? You see, the market came here to tap into it and then make a buy. That's why you see the signal here, buy. You see, the signal came here, buy, right? And it was a win. Look at it. It went way up. The same thing happened here. There was a little short. So what do you do? Fine, there's a little short. So what do you do again? This was the last high. It was the last high before it came down. So what do you do? You put a line here. The moment this breaks, you set your buy limit. The market came back, tap into it, and then it went up again. You make more money. It's the same strategy. Same here. The market came down here, right? And then went and broke here. As soon as it broke, you put your line here, it came down to tap into it, and then it goes on. Now, while you're at it, you see there's another short here. The moment you see a short here, now, you wait again for the same thing to happen. This was the short area. Until the market breaks, you make a buy. The market tap into it again, and then it goes higher, and you make money. This is, if you are following this strategy, I tell you, you'll be making a lot of money every now and then. Yes, what kind of money? Not the type you live in the market and you stay. Is a scalping type of money, which means you take a little money and then you go out of the market. You wait for that move again. You do that again. You make more money. That's another way of using the trend wave. Okay, now let's now use the trend wave according to what we have right here, which is assuming you are a total newbie and you don't know how to trade at all. You just want to follow a simple instruction. Okay, so what do you do? Now let's look at this. Remember, we've all agreed that this is a this is an uptrend, right? So the first rule, let me type it here. Let's talk about the rules now. If you're going to be using this directly, I call it the rules of engagement. Let me type. I don't like typing actually. I try it as much as possible to avoid it, but sometimes I just have to do it. All right, so rules of engagement. The first rule is, did the scanner call the trade? You ask yourself, did the scanner call the trade? Now, how do you know? How do you know? How would you know if the scanner called the trade? The first thing you see is the scanner will tell you long. Second thing is you see the setup. You see the parameters. So yes, the scanner called the trade. So that is what? A yes. Where's my brush to use that? That is a yes. 1 minute, guys. Okay, nothing like that. Let me just use this. Okay. That is a yes. Okay. Now, the second thing, what's the second rule? What's the second rule? The second rule is the trend in line? Sorry, is the trade? Sorry, is the trade, or let me use setup. Is the setup in line with the trend? Now, you want to know if this setup is a buy or is an uptrend, right? what you're looking for is buy. You only want to buy. So you look out for buys, okay? If the market is uptrend, you only want to buy, never sell, right? So uptrend is, now for the purpose of the new ones again, it's simple. Let me show you another way of knowing if it's uptrend or not. If you look at this place, I want you to focus on this price area, right? The coordinate here. Look at the price area here, right? If I put my line here, the price was 2,884. If I put it here, it's now 2,916. If I put it here, it's now 2,939, 2,991 until here. So the price keeps increasing. That is uptrend. That's how to know uptrend. Uptrend. Another way to know uptrend. If you don't know how to study the higher high, higher low, just ask yourself, what was the price in the previous areas? The previous areas, what were the prices? Okay, and you now check the present one. That is the way to know what or whether it's an uptrend or not. So now we have confirmed it's an uptrend. Now the setup says sell, sorry, buy. If you look at it, it's a buy. Now, for those who are new, another name for buy is long. Another name for buy is long. Okay? That is another name for buy. It is long. So when you see long, it means buy. When you see short, it means what? Sell. So this is a buy. The entry is here, and the TPs are here, and the SL are up there. This means that the second question, the second rule is being fulfilled because it's an uptrend, and now it's saying buy. Now, for those of you who remember when I was telling you about when the market moves like this, you see, this was a high, and then you make the low afterwards. How would you know whether to buy or not? You put a line on top of the last height of the low, okay? That's the last high. You put a line here, and when it breaks off, it means it's going to buy, okay? That is exactly how the scanner makes its entry. If you notice, the long was called here, but the entry was here. The entry is targeting this area, okay? That's when the market was on its way down and made a lower low, lower high. The market, the last low was this one, right? That's the last lower high, was this area. So if you put the line here, it's correlating with the entry. So the market is, the scanner is expecting the market to break. The moment the market gets to the entry, it means it's going to buy because it's breaking off the last low. But like I said, in order to make it easy, just focus on the rules of engagement, okay? So your job is, number one, did the scanner call the trade? Yes, there was a long and there are parameters. Number two, the setup, is it in line with the trend? The trend is uptrend and you can only buy. And this is a buy, right? Making two. The third one, to make it a better, to increase your win rate, okay? To make it more better, okay? Is the trend in line with a higher time frame? Sorry, higher. A higher time frame so is in the line, is this trend in line with a higher time frames trend? Now, in Forex, there's what we call time frames correlations, okay? So if you're taking a setup, like this one is on 5 minutes. For those of you who look, if you can see this, it's on 5 minutes, right? This is 15 minutes, 3 minutes, 1 minute, 30, 1 hour, 2 hour, 4 hour daily. Yeah. Now, you are taking your trade on 55 minutes. But I hope you are aware that you can even decide to take it on 15 minutes if you want. But the default time frame is 5 minutes, right? So if you're going to take your trade on 5 minutes, it is very good to confirm the direction of the market through a time frame that is twice up the line. So if you're looking at 5 minutes, you want to go check, confirm the trend at 1 hour. If you're looking at 15 minutes, you go to 4 hour to confirm the direction. If you're looking at 1 hour, go to daily to confirm. But you know, we are focused on the 5 minutes because the setup always gives us a 5 minute, right? So for 5 minutes, you go to 1 hour to check. At 1 hour. Now, guys, I want you to put it in the chat box. Is this an uptrend or downtrend? Even at 1 hour. Uptrend or downtrend? If it's uptrend, put 1. If it's type 1 in the chat box. If it's downtrend, type 2 in the chat box. Is that an uptrend or downtrend? All right, good. 1, up, 1. Good, 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 good. Now, guys, you're getting it. So the moment you can confirm this was, I tell you nothing more, just take the truth. Don't need any confirmation again. What did I say, guys? Go on your trend wave strategy. Check out for the first rule. Did the scanner call it? Is it a long? Is it a short? Does it have parameters? That answers the first question. The second, is the setup in line with the trend? Now you ask yourself, is this an uptrend or downtrend? If it's uptrend, let me write that here. If it's uptrend, you're looking for a buy. If it's downtrend, you're looking for a sell. Which is also, which means long. But if it's downtrend, don't compromise. Don't ever compromise. There will always be another trade. Sometimes you feel like, oh, I need to take this trade. Well, the question you want to ask yourself is, does your capital agree? Short. So this is the same. So whenever you see the market on its way down, you look for sell. Whenever you see the market on the way up, you look for buy. So remember, what's the first rule? Did the scanner call the trade? How would you know? You have to see an action like this, long. Number 2, you have to see parameters like this, buy. Long means buy. When you see this long, buy. And another way of knowing buy for the newbie now, whenever you see the entry below, sorry, whenever you see the SL below the entry, it means buy. Whenever you see the SL below the entry, that means buy. Okay? Whenever you see the SL above the entry, that means sell. Then the TP will be down. Okay? That is simple. So now, the second question is the setup. This is the setup now. We call this a setup, which means the market is ready for you and it's telling you to buy. Now, this is a setup. But the question is, the buy order, is it in line with the trend? The trend is higher, high, higher, low, which is uptrend. Yes, it is. That is it. The second question now is, you know, it was on 5 minutes, right? The second question now is, this particular trend that is uptrend, does it correlate with the higher time frame also? So you have to go to the higher time frame. Remember, when it's 5 minutes, you go check up on the 1 hour. When you are trading on the 15 minutes, you check up on 4 hours. If you're trading on 1 hour, you go to the daily to confirm. So as of now, the default time frame is 5 minutes. You go to 1 hour. So on 5 minutes, it's confirmed is uptrend. Also on 1 hour is an uptrend. Go for this trade. Okay? You go for this trade. This trade is a good trade, which means after the open of the market, hopefully gold is going to buy. And I'm happy because I'm in a buy. I'm on a buy actually. Don't mind me here. That's by the way. All right, guys. That is how to take the trend wave scanner. Let me take this back so maybe you can. Where's the rule again? Oh my goodness. I hope it's not. I can't type this all over again. Oh my goodness. Where is it? Okay. Don't push. All right, it's here. So guys, look at the rules. If you want to screenshot, you can screenshot this. Let me make it bigger. When you have this rule by your side, make sure you don't skip these rules. Never skip these rules. Guys, never ever skip these rules. Now, guys, I want to give you some bonuses. Now, remember, I call them bonuses. You know, bonuses are just the freebies. The main thing you need to check out, the moment you have this, take your trade. Don't wait. You can take your trade with a closed eye. Yeah, but remember, not every market will always go well. But this has more wins than losses. Okay. Now, let me give you the bonuses. What are the bonuses, guys? That's which means additional things that when you see, it gives your setup more strength. It gives you more strength. Guys, I want you to look at something. Okay. Let me make this bigger. If you notice on the scanner, there is this part where you have this wave at the bottom here, this wave. Can you see this wave? Now, these are bonuses, okay? If you don't see them, no problem. Still take your trade, okay? So long you have this above, take your trade. But these are bonuses. I'm emphasizing again, bonuses, right? If you see this one, they are added confirmations to make your trade go smoothly, okay? Be thankful if you see them. Now, what are those? If you see this wave around the red zone, is a good place to buy. So which means after all this confirmation, you see that the wave is around the red zone, buy. So let me write that down so you can take a picture again. Okay. So the bonuses now, I'll use A, B, C for the bonuses so you know the difference. Okay. Let me use a small letter. If the wave is found at the bottom of the red zone, see what I'm teaching you right now. If you put it into practice from Monday to Friday, you're going to come back and show me your account. Now, that's where you do the last thing I'm going to talk about, okay? Because no matter how good the strategies, no matter how good you are in trading, if you're not good at risk management, it's always be losses, loss upon losses, right? All right, so at the bottom of the red zone, you know, the best thing is at least I've been able to show you this. So when you see this, you will remember what I showed you. This is a blue zone. This is a, the blue zone, the red zone. Anytime the market is around here, is an area to buy, especially when it's around the bottom area. It's an area to buy. Okay. But when you see, which is vice versa, it's not supposed to be the second line, but I'll just put it there because some of us don't know. So but if the wave at the top of the blue zone, then you want to sell. This is a buy, while this is a sell. Okay. This is a sell. You can imagine these are like, we call this double confirmations, like multiple confirmations. Huh? So when you now remember, I'm emphasizing you don't have to wait for this. If you don't see them sometimes, don't worry, just take these ones and then you follow the advice I'm going to be giving you later on, and I tell you are good. Okay. Okay, guys. All right. So talking about this, let me make this smaller so at least we can have some room. Then later I'll make it bigger. Okay. Because I'm tired of shifting and shifting. All right. That's one bonus, right? Another bonus is this. Apart from the market being at the blue or the red zone, if you see the market at the red zone, it now has this green thing, the green thing you're seeing here, the green line, just like this. These are the lines. We call them divergent, but don't worry, I don't want to make it complicated. Don't think about it, forget the name. The moment you see this at the bottom of it, now look at it, the market is at this area, at the last bottom of the red zone. It now has this green. Guys, I don't want to encourage you to over leverage, but I tell you, just now don't let me say that. No. I can't say that. No. Just do your thing. You're gonna make a lot of money. And I'll prove it to you. Look at it. Do you see when the market came here? I want you to look at the coordinates. Guys, follow the cursor. Can you see the cursor? When the market came here, I think I need to use my tools here. Let me see. I don't have it. Why am I here? No. I need the annotation. Okay, good. Look at here. Let me take this up. Okay, guys, look at here. Can you see here? Now, if you trace it upward, you see that it happened around here. Do you see that? Because of this double confirmation, because it was at the red zone and also at the green thing you see here at the bottom of it, look at the market went very high. You see it now? So that's how it works. So when you see this, or you see one at the blue zone, and you see this at the blue zone with the red tiny thing there, then it's going to sell. But because these are uptrend, sell does not have any place here. Don't think about it. You only look for this when you are in a downtrend, which is the market is on its way down like this. Remember, like this. That's when you look out for this. But as long as the market is like this, only look out for these ones, the green and the red zone, and you take a buy. These are bonuses. Okay? I think I will stop there. Clear all the drawings. I'll stop there for the bonuses because, okay, yeah, let me just write. I don't need to write that. Oh, I need to write this one again. Okay? So when you see the divergent, remember the name. When I say divergent, just know that these are the lines. I'm talking about these lines at the red zone. Okay? When you see them at this area, you buy. When you see them at this one, if it's a downtrend, you sell. Okay? So whenever you see the divergent, that's the name, okay?
Medicine, you go inside, Medicine Junction. 20.
All right, can you mute yourself, please? All right, so what this means when I say either zones, I'm trying to say that it's a kind of a relative thing. If it's a market is on an uptrend, like if you have it on an uptrend, like the market is on its way up, you want to look for divergent at the red zone with the green line like this for double confirmation. But if it is on the downtrend, you want to look for the red one at the blue zone. I think that is that on the bonus. Guys, with all of this, I tell you, you can never miss it on the trend wave strategy. Even this is the only one you're taking every day, you're going to make money, guys. But now, this is how to trade. But the question is, how do you make money? Your risk management. I hope you are taking a screenshot of this. Now, for the risk management, guys, I want you to follow
Coach,
this.
can you mute everyone? Some are not paying attention. They are disturbing us. Please.
Yes,
I beg you.
I'm going to do that. Thank you. All right. So everybody's muted except me. So if you want to say something, you click the hand icon on your screen and I'll unmute you. You say something. But that's when we start the question and answer, okay? It's very important we finish this today, not tomorrow, today. What exactly is... All right. So now let's talk about the rules of risk management. Guys, the market does not belong to anybody. There is no perfect strategy. 100% is not guaranteed in Forex. You will see this disclaimer everywhere. Just like life. Life is not guaranteed, you know? I mean, no one can say, oh, I'm going to live to the next 5 years. So we only hope and pray that we live for 5 years and even beyond. Okay? Nothing is guaranteed in this life, including Forex. So because that is not guaranteed, we have to take some measures to protect our capital so we can have a trade for the next day. Now, what do you do to make money, to make sure you are in profit most of the time when you are trading this? Now, guys, so let me write the rules, or let me just write risk management. If you don't follow this, well, you're your own, you know. I mean, my job is I just want everybody to make enough money so you can be able to subscribe for 1 year and then make more money. And then you can tell your story and bring other people in and make money on the affiliates. That's what we do. After all, that was how I got most of you to join this whole thing, because you see what I post, the results and all that. You need to have your own result as well. Okay? Now, so the first rule is, as soon as, first of all, make sure you have a fixed amount you trade with. Okay? Fixed amount. Okay? Or let me say the fixed risk amount. Your free risk amount, yeah? Let me use that word. So now you can do between 1% to, so 1%, yeah, to 5%. Okay, 1% to 5%. It's LD. It's okay. Now, guys, 1% if your account is from, let's say, $5,000 and above. Is it 5,000? Yeah, let me check. Yeah, 1% of 5,000. That is $50, right? Yes. From $5,000 and above, you can do 1%. You can do 2% if you want. 3% from $1,000 and above. But the moment your fund is less than 1,000, you want to do 5%. You want to do 5%. Or because I'm saying this because sometimes you have $100 and you want to do 3%. Remember, that would be $3. What trade can you take with that? Even if you are using leverage of 1 to 10 million. Okay? And if you have $500 and you want to use 3%, well, maybe that's still okay. $15, it's okay. But just know that if you're going to make your profit, if it's times 2, you see $30, you close the trade. You don't take in the trade of $50 and you expect it to make $500 on the, $500 on $500. No. Okay? But that's the point. Just make sure you choose between this range, okay? Whenever you're trading. So you know the amount of money you are putting in. The rule is never trade with money that you cannot afford to lose. And also, another rule is if you have your capital, let's say you have $100 as your capital, you want to give yourself a chance to trade as much as possible. So you divide this by 5%, which is, of course, by 5. If you're taking 5% of $100 on every trade, you have a chance to trade 20 times. And except strategy is bad, nobody will trade 20 times and will be in loss so long you're following this rule. But the problem is we have $100 and you're using 0.1, which when it's a stop, when it hits stop loss, is taking about $50 out of your $100. Then how do you get to trade again? To know how to do that, guys, you use cashback. I'll make a small video. I think I've done a video before on cashback. Just go do cashback. Or another way is, if you're going to take a trade, you have to use this tool. Look at this tool. We have the long tool, the short tool. So if you use the short tool, for example, let's say we want to use the long tool for this trade. Let's say we use the long tool for this trade, the long one, the long position tool. So you place this at the entry. Look at it at the entry. You drag the green part up to the TP5. Make sure it's on the same level. And you drag your SL. Make sure it's on the same level. Okay. If you can't achieve that yourself, you can double click on this. Okay. When you double click on this one, it will come up showing you. Okay. Where is it? All right. So just try and make sure you achieve this by dragging it to the stop loss. Okay. Don't worry about double clicking. It's not coming up. Now, when you do this, it helps you to know the pips. For example, when you're looking at gold, this is 38 pips. Okay, this is 38 pips. Okay, and the TP is 102 pips. 112 pips, sorry. Okay, so if you look at this side, can you see this side? 38 pips, 102 pips. Always check this side. This side will tell you the actual pips. Okay, for gold. That's for gold. But for other forex pairs, they will tell you the exact thing here. So with these 38 pips now, you can do another way, another faster way to know your lot size is, let's say you are using 5%, which is 5 over 100. 5% is $5, right? If you are using $100 capital, you just do 5 divided by 38. That will give you 0.1. You multiply that by 10. Sorry, you divide that by 10. Forgive me. Let me do it again. $5 over 38. Divide again by 10. You are using 0.01 on this trade. You see? You are using 0.01 on this trade. Okay? That's another faster way. So what's the faster way again? Your risk amount divided by the number of pips for stop loss. Okay? Divided by 10. That gives you your lot size. Or you go straight to cashback and fix this in. So that's the first thing of the rule of the game. The second thing you need to do is Number 2. Okay, guys, 1 minute, please. 1 minute. All right, guys. Sorry. All right. So as I was saying, okay, the next thing you need to do is as soon as you are in this trade, as soon as it hits TP1, as soon as it hits TP1, after TP1, that's the second rule. Okay, move your stop loss to half or straight to entry. So after TP1, let me just say, after TP1, move your stop loss to entry. So just move your SL Sorry, guys. I have to attend to my kids again. Oh my goodness. All right. Yeah, as I was saying, after TP1, move your SL to entry, to the entry, yeah? Move SL to entry. Don't think twice. Don't even think, oh, I mean, what if it comes back and hit it? Then it's okay. Because let me tell you one thing, guys. Most of the time, when the market, most of the time, not all the time, when the market hits TP1, guys, look at it. This TP1. Let me remove this. Okay, when the market hits TP, oh no, I need this. Sorry. So when the market hits TP1, as you can see here, I mean, I don't want this to show. So, okay, let me do this. Will it work? All right. So once it hits TP1, look at the TP1 here, right? TP1 is 2940.65. Fine. Move your stop loss like this. Go to your, how do you do that? Go to your MT5. Change your entry. I mean, go to your stop loss. Like, you know where you have your MT5, right? When you have your stop loss like this, clear it off, modify, and change it to your entry price. So you know what that means? In case the market retraces back, it will take you out, but your capital is safe. Now, does it happen all the time? No, look at this trade. It went from here straight to TP1. It never came to the entry and is now at TP3. You see, you are good. You are good. You are good, guys. It's better. So it doesn't really happen all the time. So don't be afraid that, oh, I'll be taken out if I move my entry to. Do that. Keep your capital. There's a good feeling if you have $1,000 and you go through the market, you see some profit, and maybe you could not take the profit, but the market reverses and it takes you out, but your $1,000 is still $1,000. Then you want to make sure that, oh my goodness, if I do that, oh, it will take me out. What if it takes me out and then I'll move up? It's okay. Another setup will come up. Because if you don't do that, who told you it's not going to come down and then hit your SL and take all your money? So you can keep your 5% for the next trade. So guys, follow this rule, okay? And then the last rule is, what last rule can I give you on this one? I think this rule is okay. When you follow this rule, is okay, okay? So the next thing is just, when it hits TP2, move your stop loss a bit close to the TP1. So now you are sure that whatever happens to this trade, I'm going to be in profit. Then when it moves to TP3, move your stop loss to what? To TP1, secured for life. When you move to TP4, move your stop loss to TP2 or a bit above TP2. That's how to enjoy this trade. That's how to be profitable all the time. So guys, you follow these rules while taking this trade. Okay, before you take the trade, you follow this rule. The moment you agree to take this trade with this rule, everything is fulfilled. You have to what? Apply this risk management. And this is how to win. Now, guys, before you ask your questions, I don't know if this is the right time. Sheriff, should I allow you to present this? Will you present this yourself? Because I'd like you to present this. But if you cannot present it, I could just do it in a very sharp way to make, because of the time. Don't worry. We will create another time where you will explain this in details, but let me just give them this idea. Guys.
Okay, sir.
Now, I have someone here. is one of you guys, is one of us. Okay, he's one of my champions. You guys are my champions, right? This guy is kind of exceptional. You know, he comes out anytime he's around, he comes with an idea, you know, and he puts it in paper. He's good at statistics and data collection and all that. I mean, this guy is another AI on his own. So I mean, I should be calling him Gigabyte. All right. So he came up with an idea, and I love that idea. Actually, my mind didn't even go there. So let me show you what he did, guys. Let me quickly show you what he did. He did a worst case scenario situation. Okay, a worst case scenario situation. Okay, no. Sorry, I think you send it to another number, right? So let me just check my name. I think I have it here. Let me see. Okay, no. Okay, Sheriff, can you do me a favor? Can you send me? Let me check first before I ask for this favor. I think I downloaded it. Can you just send me this thing again? Send me the worksheet. Are you there, Sheriff?
I'll send them now, sir.
Okay, send them to my MTN WhatsApp. Guys, he made a statistics on trend wave, taking trend wave trades with the worst case scenario. A worst case scenario that will never happen. It has never happened and it can never happen. Now, what was the worst case scenario? What's the worst case scenario? He made a research, like he collected the data on it, that assuming you take trades on trend wave, following this risk management, okay, and you take 5 trades a day, and out of 10 trades, you have 8 losses, 2 wins. Imagine, which means 2 days, you only have 2 wins, and you have 8 losses, but 2 wins, which is a very worst case scenario. It's not a good thing to look at, right? But then, even with that, guess what? Do you know that if you follow your risk management and you do that with trend wave, at the end of 20 days, you could take $100 to thousands of dollars. At the end of 30 days, maybe 30 days or thereabout. Okay, I have it here. Let me just show you an example of what I'm saying. But another day, we're going to be presenting this. But I just want you to have an idea that this will help you and motivate you to be serious with your risk management, to taking your risk management seriously. Sheriff, which one should I use? Okay, yeah, let's look at the scenario, guys. Can you look at it? Can you see my screen? 5 trades per day, 7 losses, 3 wins. Okay? Say you take 7 losses, 3 wins, which means if you're taking 5 trades per day, in 2 days, you would have taken 10 trades. Out of the 10 trades, you had 7 losses and only 3 wins. What will happen? Let's see. Let's see what will happen afterwards. This is a very bad case scenario, right, guys? So look at it. Oh my goodness. I don't want, Sheriff, I don't want to blow their minds. Let me go straight to the 20 days. I think this one is talking about how long?
Please blow it, blow it.
No. I mean, in Forex, we like to be conservative. We like to be conservative. Like, if you're going to be having 10, I'll tell you have 1. So in case you see 5, you appreciate. Let me use this. Okay, good. So guys, look at this. So this strategy is based on trend wave, using the trend wave. You see that we really prepared for this trend wave topic, right? I need to move this guy around here. Now, assuming you have a $100 account, your risk is 5% on every trade. Now, let's look at it. So on day 1, remember, you take 5 trades per day. On day 1, you took let's say you take the first trade is a loss. So that is -1, which means the first one is a loss. So you have lost 5% of your money, which is $5. Your balance will be 95. The second one is a loss. Remember now, the moment your balance is 95, your next 5% on a new trade will be $4.75 because it's now 5% of $95, not 5% of $100 anymore, right? So a loss again, $90. The next one will be 5% of $90, which is $4.51. A loss again, $85. So your day 1, you had 5 losses, and your $100 gets to $77.38. Day 2, loss, 7th loss. Now, the 8th one is a win. But remember, when you win, you have 6 times your reward. When you lose, you only lose, you have like once, right? So which means when you win, you have 6 times whatever amount you put in. But when you lose, you only lose that particular amount. So now your 5% is now around $3.68. So the next trade you take here is a win. It's now 6 times. You multiply it by 6. This will give you $20.95. Add that to your $69.83 balance. Your money goes back to $90.78. The next one also is a win. The ninth one is a win. Now, remember, the 5% of $90 is $4.5. Times 6 will give you $27.24. Add it to the $90, your money is back to $118. The third win will give you $35.41 because now your 5% is $5.90. Takes you back to $153. Now, the winning time is over for day 2. The remaining days, now you have day 3. Loss again. Day 3, all losses again. Takes your money back from 153 back to 107. Okay, 118, right? Now, on the day 4, the first 2 are losses. It brings your money back to 107. But luckily, the next one is a win, 139. The next one is a win, 181. The next one is a win, 235. You see, from $100, your money is back to 235, despite the fact that you always have 7 losses, only 3 wins out of every 10 trades. So this is how it goes on. Let's go to day 20. Day 20. Remember, 5 days a day, 5 trades a day. And you know, the trend wave will give you even more than that, like gives you more than 30 trades in a day. But you only take 5 out of them. If you agree, because some of you, when you start losing, you keep taking trades, you keep taking trades, and by the time you know you are taking 30 trades a day. No, that's not good. So day 20, what would have happened? By day 20, your money would have grown up to $3,462. I will stop at day 20. I don't want to go further than that. Now, guys, in your mind, I don't want you to take my word for it. If you want to prove this right or wrong, I want you to do something for me on Monday. Follow the rules I've given you, the rules of engagement and the risk management rule. Take the trend wave based on these rules. Take it 5 times a day, and let's see on Friday with your results. This is how I know those who are really serious on this. So this time is your question time. I will stop here. Question. Now, I will unmute you. I think you should just raise up your hands. I don't know. Which way do you want? You want to text your question, or you want to just... I think I can stop recording here, so I don't want the recording to be too long. Where is it? Stop recording. All right. Stop. Now I want your